Mike,
Hey, Harland.
good to see you. I've just been really aware with all this tariff talk and all the stuff that's going on that it's really shaking not only the global economy but people's individual kind of investment economy here. The stock markets have gone down, and for those of us that are in that 50 to 75-year-old age range, uh, those events don't just make headlines on the news every day. They hit our portfolio.
You're right, Harland. We don't have as long to make it up as what we did back in our 20s or 30s. And so, yes, we people are more concerned at our age. And more than ever, real estate does stand out as a more stable investment. But not all real estate's created equal. You have single family houses, which go along with um, the local market, and then you have multifamily real estate, which we have much more control over. So let's talk about three real estate focused strategies and a few cautions to help you protect what you've built and grow with a purpose.
So number one, what's number one here, Mike? What's the first one?
We want to move from volatility to stability using income producing real estate.
Hmm.
We like multifamily real estate in particular, especially in well-located workforce housing markets, because that gives you a reliable, recession-resistant income. People always need a solid place to live. And people can invest passively in syndications, so they don't have to be the landlord, and it can still benefit from the cash flow and appreciation without the day-to-day management.
Yeah, so income producing real estate can help if there happens to be a recession, which some people are saying is coming. And we'll look in a bit here at point two about if inflation comes, and they're both likely to come. They come in cycles with that. We had a Houston property recently, Mike, that we helped people get into.
That's right. And that is serving workforce housing and providing income for a number of investors.
Yeah, another caution. All deals are not equal out there. That's one reason why we look for the best of the best operators in the country. Some are very aggressive with their projections, and we want people that are a bit more conservative with that, have a deep track record, have an excellent team. Uh, how to ask the question when you're looking at a real estate syndication, how does this operator manage risk as it's in this climate right now? So point number one is to move from volatility with our investments in times like this to stability with income producing and particularly real estate. And point number two now is use real estate as an inflation hedge. So it can be a hedge when recessions come, and it can be a hedge if inflation comes this way. Uh, Rents often rise in times of inflation. We found that in the apartments that we owned, especially multifamily, rents tend to rise. It's a natural hedge against inflation. So add real estate, particularly multifamily syndications, which we like, to your retirement portfolio, and it'll help you maintain your purchasing power over these next 20, 30 years during this time in your life.
And then we like to use leverage to multiply our return during inflationary times. So now we're not just providing a hedge against inflation, but we're using the leverage as a tool to multiply our returns when we do have inflation.
Yeah. So leverage really means that we're borrowing some of that money in addition to what we put into it, and both of them are increasing during the inflationary times and
That's correct.
multiplies our returns. Wonderful.
Right.
Any cautions on using real estate as an inflation hedge?
Yes, the location and property type do matter. Not every market can support rising rents. If you have people leaving an area, then it's going to be hard to increase the rents. But if you choose an area like we look for, where's your job growth? Where do you have major companies hiring? What are the population trends? Where are people moving to? Are there any supply constraints? Or has there been a lack of building new apartments in an area? So you have job growth, but not new housing, then those are all going to lead toward higher rents in the near term.
And that's a piece, again, while we're getting some of the best operators in the country that we're investing with and inviting you to be a part of, they've done that homework to find those key places in which to invest during these turbulent times here. What's point number 3, Mike?
We want a structure for tax efficiency and legacy impact.
You really like that tax efficiency piece, don't you?
I do. There's, that I love the idea of tax free, and the next best thing is either reducing or delaying taxes. And, there are, we can take advantage of those with real estate. But, and uh, there's, number of options we can use. We have depreciation where we can write down the value of the improvements. That helps offset some of the income. We have 1031 exchanges, which operate like monopoly, trading in houses for hotels, and you don't have to pay taxes in between when you get rid of a property.
Mhm.
And step-up basis rules can preserve wealth across the generations. When you pass away and leave your property to heirs, they get a step up in basis. So they do not have to pay the taxes that you would have had you sold the property before passing. So
Yeah. I have a friend who's planning to leave a good bit of his estate to his children, and he's thinking about that right now. If it holds on through your death, then the step up helps and a number of other things with that. So make sure you're planning, your estate planning is a big piece. And you don't have to go it alone. Talk to us, find real estate attorneys and accountants that understand syndications and estate strategy. Then you can maximize the benefits during this time in your life. So we've looked at 3 points here today. One is just in case there's recessions coming, to move from the volatility of our current investments to some stability with income producing real estate. Second, we looked at using real estate as an inflation hedge in case inflation's coming. It works both ways. We looked at that, and then just get that tax efficiency and get that legacy impact that you want with your investments. During these uncertain times, real estate can offer some significant certainty for us, but it takes some choosing wisely. It's not about chasing returns at this point. It's about creating stability, income, and impact.
that's right, Harlan. And if you're ready to align your investments with your values and to protect your future, we'd love to help. We have an ebook. It's the 3 Keys to Unlocking Your Retirement Dream, and you can download that from our website. And also, you can use the Calendly link to schedule a call with us.
Yeah, we'd love to talk with you. Mike, great talking with you in these uncertain times. We're looking for that stability right now, aren't we?
Yes, we are, Harlan.
All right. Bye-bye now.
Yeah.